Crocs is down about half from its all-time high, and it's down 7.5% year to date, even though the market's up about 15%. So, is it now the time to buy Crocs as a company? They make those very fashionable shoes that Mo loves,
I do love
that
them.
I make fun of. The question we have to ask ourselves is this a fad? The company hit an all-time high of $183.88 on November 15th, 2021, almost 2 years ago now, hit a low of $65. $65 almost a year ago now. So it went from 184 to 65 in less than 10 months. That's a pretty big drop. And as you know, just because a company is at a 52-week low doesn't make it a buy. But it's a great time to get an idea if you should look further, because when something takes that big of a hit that quickly, it shows me that people are not popular on the stock at that time, and it could lead to an over-exaggeration. So in this video, we're going to go over some news. We're going to go to our community for some bull and bear cases. We're going to do some analyst estimates. Of course, we're going to cover our 8 pillars on the stock, and we're going to finish it off with our stock analyzer tool, which will tell us what price to pay for the company based on the assumptions we make in the future. So whether you're a beginner or more advanced investor, stick all the way through, because there's something for you in this video, no matter where you fall on the spectrum. Mo, let's check this out. Let's go to Crocs and start with some high-level views.
All righty.
So Crocs is a $6 billion market cap business. If you wanted to buy every share outstanding, you'd have to spend $6 billion to own 100% of the company. The average net income in the last 5 years is $412. Last year, $670. So it's just showing an increase in net income over the last 5 years. PE of 9, Mo. And a 5-year P of 4. Now, I did not expect this. A 9 PE is pretty freaking low.
Yeah, it's really low.
So the question is, again, can the revenue grow from here, or is it a short-term fad? You've got healthy profit margins here. A little bit down off its high, but not terrible.
This has been a pretty long fad, if that's the case.
Yeah, that's true.
I mean,
listen, they're very practical shoe.
Is it really a fad anymore after 10 years?
People, that's a very good question. After 10 years, is it really a fad?
Yeah.
But I think to myself, how many other replacements for this Crocs are there? What is a Crocs? What does a pair of Crocs cost?
$30 or $40.
Is that it?
Yeah. You can go to the website.
Go look at it on the website. Guys, look at this. 55% gross margin. This means every pair of Crocs they sell, 55% of it goes to the bottom line, essentially. Now, obviously, they pay tax on it, but that is a huge number. And if they can grow their revenue at higher levels, that's going to really lead to much higher profit, which also leads to this. Look at this 5-year return on invested capital. Guys, 23%. The market's like 9 or 10%. 23%. That means when they invest money back in the business, they get a very high rate of return. So the question is, can they keep reinvesting at high rates of return on this company? No dividend, makes sense. Boy, wow. Mo, tell me, what does it cost to buy a pair of Crocs?
$50 for your basic Croc.
Classic clog.
This doesn't include any of the things that you put in them. Gibbets. Now, I was talking with some people when I was in Mexico. What?
They're laughing at the name Gibbets.
Gibbets. These McQueen, the race car thing, I don't know what this is. It's from a movie, I think.
Yeah, Disney cars.
Okay, so cars.
Mo doesn't have kids, so he doesn't understand
these
this.
Things are like, they're going on like eBay and StockX for over $100. I was talking with a friend of mine in Mexico. She's like, my kids bought them and we're reselling them and this and that. I'm like, really? She's like, yeah, Crocs do that.
So let's take a look at the revenue for Crocs. Guys, it was actually before 2021. Let's ignore this right now. Let's just look at up till June 2020. Mo, look at the revenue here.
There's no revenue growth, basically.
0.
Yeah. And they acquired Hey Dude.
Oh, there was just an article today on Hey Dude.
When was, okay, so that had to be 2022 fiscal year, because that was a $2 billion acquisition.
And look at before. Look from 2006 to 2013. Big time growth. 202, 590, 900. Big drop to 630, 700. This was, oh my God, I can't believe I'm going to say this, but were they a recession-affected business? How could a $50... Okay. But then grew back up to $1 billion. But it hit $1 billion in 2012, and it didn't basically get new highs until 2021. That's questionable.
Yeah.
Now, one thing I will say is, oh, wow, Mo, look at this. They also lost money like crazy up until recently.
18. Interesting.
I wonder what happened there. That's interesting, guys. That's very interesting. Let's check out the 8 pillars here real quick. Remember, if you're part of our community, you can customize your pillars up to 12 different pillars and 4 quadrillion different versions. But Mo, look at this. Apart from their debt,
it's pretty good.
Yeah.
That's why there's so many people in the community that have been
asking about this.
Yeah, exactly.
I get that all the time, and I just always say, I just don't know if it's just a fad or not. Well, what's some news on Crocs? Is there anything on Crocs that's new? I mean, look at all these check marks.
So the biggest news is obviously the Hey Dude acquisition. Crocs brand growth of 33.2%. That's growth in Asia, while Hey Dude direct-to-consumer grew 29.7%. Digital revenues increased 36.7%, their most recent earnings. Let's see. They announced refinancing of term loan B facility. What is this? This is an article.
Yeah, that'd be interesting to see what they refinanced at.
Let's see here. All right. Innovative footwear.
Base rate plus 2%, which is a decrease of 50 basis points.
There you go.
All right. So they're going to save about 50 basis points on their debt, which is pretty good. Now, doesn't mean it's the base rate plus 2%. What's their base rate? Was it LIBOR? I don't know what the base rate was, but a lot of times they're like some sort of treasury yield or LIBOR or something like that. So guys, all around, I mean, and with a high gross margin, and what is this? What kind of shoe is this considered? Is this a leisure? I mean, I don't even know what you call this.
I think this is what you call designer.
I mean, look at Balenciaga.
You want to see
Balenciaga makes that shoe that looks exactly like Crocs, right? And Balenciaga's
and Yeezys. Have you seen the Yeezys?
Oh, I spelled Balenciaga wrong.
So these are my Crocs that I wear.
Wait, is this a partnership with Crocs? This is a partnership with Crocs with Balenciaga.
Really?
$650, guys.
You're right.
Because look, says trademarked right there.
Yeah.
Wow.
Those are my Crocs. Those are my daily users right there.
Oh, oh God, I know you're such.
Goes with any outfit.
It goes with zero
literally
outfits.
Any outfit you
it
put on. It
literally goes with zero outfits. Zero outfits.
I've had these things for so long.
Mark my word, I'll probably be wearing Crocs next year. This will be terrible. Lisa might leave me if I wear Crocs. All right. So I'm not as worried about because the 5-year free cash flow. What's the 5-year average free cash flow? 326 million, right? But they're 1 year 750 million in free cash flow. I like that a lot. Bigger cash flow than their net income. Also, it's going to drive. Look at this. Let's say they're able to keep their 1 year free cash flow the same for the rest of the time. That takes this 5-year 8.4 number immediately to a green check mark, because you're going to over double this. This is going to go down to like 3.5 or 4. So this is a misleading number because the last 5 years saw amazing free cash flow growth. Mm-hmm. It skyrocketed, right? So in our community, we asked everybody, hey, what's your opinion on Crocs? Give us your bull and bear cases. So let's pull up that community chat here at the very bottom. Let's see what people wrote. Crocs stock. Mo, what are you seeing that you like here?
A lot of what we're talking about, especially when it comes to the debt that they've been taking on. Crocs fits my 100. This is from Eric J. Crocs fits my 100-foot view process. 7 out of 8 pillars: continued growth, low PE, and healthy ROIC. Real-world evidence shows, for some reason, these shoes are trending with kids of all ages.
Oh, wow. And by the way, I do believe that there's an absolute use for Crocs. That use is like drug use in the privacy of your own home with nobody watching you.
It's pretty funny.
You like that?
That was good.
That was a joke. I'm not trying to equate wearing Crocs to drugs at all. It was just me trying to be.
It is like a drug, though.
It is like a drug. It's addictive. So, Tim, do you have Crocs?
Yeah, I have a pair somebody gave me for mowing the grass.
So somebody gave Tim a pair of Crocs to mow the grass. Do you mow your grass in them? Is it very comfortable? Nick has no pair of Crocs. So Nick and I are on the no Crocs bandwagon right now, but that's okay. Mo's just trying to make a statement.
Biggest part of the debt acquired that I can tell from the 10K, this is from Roger. Acquisition of Hey Dude for the $2.4 billion. From what I can tell, they sold some shares and they took a loan for $1.7 billion that matures in 2029. My question would be, what's the rate on that? Same question that Eric asked.
You know, I like what Eric responded to me. I asked Eric, could this also be a fad? And he wrote, Today, I think you could argue most, if not all, fads fade, but I don't worry about that type of thing in my 100-foot view. And he was very clear about talking about 100-foot view here. If management keeps the high ROIC, which means they can reinvest at higher rates and growing the cash flow, then I'm good. If not, I'll take a closer look and make the decision to sell if needed. So Eric seems like he's a holder of Crocs. And I like these comments from Eric. Eric was literally engaged in this. I look at this going, listen, I don't disagree with Eric. This high ROIC and the practicality of Crocs. Crocs is a practical, but the question is, can it be replicated? Can it be replaced with something else? Nassim.
I like that one.
Nassim wrote his bull case. My one cat loves to chew on my Crocs. That is a bull case. Roger. Yeah. Okay. So what are you thinking, Mo? Who in our community gets the free merch?
Kind of want to do two.
You want to do two?
Eric and Roger, they're
very active with it.
This is a good conversation. This is one of the best conversations I've seen. So guys, we have some merch. Fire Your Financial Planner. We have the
Paul Loves
Kathy Wood. And then of course we have our Everything Money. So you guys email me, mo@everythingmoney.com. Pick out what shirt you want and we'll get it sent
Stocks
to you.
only go up, bro.
Stocks only go up, bro, which is a true statement. And
sarcasm.
Everything Money. There
Great.
you go.
All right. So great engagement from the community on this.
Good job, guys.
And guys, again, if you're part of our community, we're going to post our videos for the week so we can engage on that and really talk about the bull and bear cases for each company. So let's see what analysts are saying, who analyze this company to death. Oh, my lordy. Look at this. EPS growth from $12.41 this year per share to $19.16 per share in 3 years.
Wow.
Mo, can you do me a favor?
Mm-hmm.
Can you look in their 10K or any recent news to see if they've offered to buy back stock since the PE has plummeted?
Yeah.
Revenue growth, not as high, but still great. Still high single digits on average from 4.1 billion to 5.75. Now, guys, if analysts were always right, I'd be buying this thing like crazy right now because I'm looking at going $19 a share in 3 years. If I know that's going to happen and it's going to grow along the way, why would I not buy this company? It's going to be selling. I could buy it today for 5 times the earnings in 3 years. You could buy it today for 8 or 9 times. If they just use all their cash flow to buy back all these cheap shares, you're going to own a bigger and bigger piece of the business, and that earnings per share could go even higher. But we don't know the future. And the biggest concern I have about Crocs is it a fad? Is it like any fad that's ever occurred? It very well could be. Remember Tevas back in the 90s?
No.
You were too young. Tim, do you remember Tevas? They're still around. Hospital people do wear Crocs. You are right on that one.
Very comfortable.
Are they very comfortable?
Very comfortable.
Mo, do me a favor. I want you to go on Crocs right now and buy me a pair.
What size?
I'm 9.5.
All right.
Don't buy me a Michigan pair. I don't want the Michigan. I want like a black or a white. You should call Lisa right now on air and say, Lisa, I'm buying Paul a pair of Crocs. What color do you want me to get it for him? Like, this is non-negotiable. I'm doing this. It's part of our video. So guys, while Mo calls my fiance and she decides to dump me in about 14 minutes, let's sit here and look. Yeah, he's calling her right now. Tell her she's on the air.
Okay.
She's going to answer.
Hey, Lisa, you're on the air right now.
What's going on?
So I'm buying Paul a pair of Crocs, and I need to know what color you would like.
No, you're not.
Yeah, it's a non-negotiable.
No, we can't do this. Can't do this.
If you don't pick, I'm going to surprise you, and you're not
Listen,
going to like
the only
it.
2 Crocs were my niece's little girl. That's the only time they're cute. That's it.
Lisa, I told him we're doing a Crocs video now, and I said call Lisa and find out because Tim wanted me to get a Michigan pair of Crocs. I said no to that.
Oh God.
Lisa, you got to pick a color.
You're not serious, are you really?
Lisa, just pick a color. Lisa,
Oh,
the 25% off ones are ugly. You better pick a color now, or else we're gonna get a 25% off
You're
one.
getting seafoam green if you don't pick.
wait, I'm not getting anything, first of all.
Oh, you want a pair too?
No. Paul, you get what you want.
How about would you prefer black or white, or a dark gray?
Where are you wearing these? Where are you going in these?
Aren't we getting married in August?
In a tropical place?
Okay. Let's everybody calm down.
Mo, get me a black pair of Crocs.
All righty.
Oh, God.
Oh, God.
I'm not a part of this.
You are not a part
I
of
don't
this.
know where you're wearing them, but okay, have fun.
I'm not going to subject you to watching me wear them, Lise.
Thank you.
All right, love you.
See you, Lisa.
Love you.
Bye. That was incredible.
Oh, you're gonna wear these walking.
No chance. All right. So we've gone over quite a few things here, guys. It leads to the next question about what price to pay for the company. So we're going to use our stock analyzer tool, which was used over 2 million times since we even started keeping track. So guys, you see us talk about the community, our chat. If you're interested in learning more about how to join our community and making life calmer for you, making investing easier and calmer for you, click this next video. You'll learn all about our software, and I think you'll make the right decision. So, Mo, have we ever done a video on Crocs? Let's go to our history.
So mine is 11/17 of 22. I have not clicked the answers that we put out or the,
Look at
the
mine.
assumptions we put.
Never. I've never done Crocs.
Okay, so I've done it. Should I click it or should we just go in blind?
Why don't you click it? Don't
Okay,
tell me.
okay.
Actually, you know what? Tell me.
Okay.
Because I want to pull up. So, guys, oh my God, look at this, Mo. Their ROIC is higher from 10 years ago. So, guys, that's why we like having this history. It allows us to go back and look at what assumptions we made in the past. And one of the great things we're going to do, I want you guys to remember in our community, whatever assumptions I put here, go into the general chat in our community and please tag me and Mo with your assumptions on this Crocs if you don't agree with us. We'd love to hear your feedback. I love engaging the community. Please tag us and talk about it. So, Mo, what were your revenue assumptions for Crocs going forward?
So I did 2, 5, and 8.
Very conservative.
Very.
Analyst estimates are for essentially 8
Yeah.
for the next 3 years.
Yeah.
So I'm going to go.
Now this was before I knew about this Hey Dude deal. So factor that in, I guess.
I'm going to go with -3, 4, and 10.
Okay.
Guys, I'm going to sit there and say it's a fad. It's going to decline 3% a year. And by the way, if it declines, it's probably going to decline faster than 3% a year. Okay, profit margin. As you can see, guys, the profit margin over the last 10 years has been 12%. Last 5 years, 18.9. Last year, 17.2. So it's probably higher than this 12. And if they can keep growing that revenue at 55% gross margin, this will continue to go up. So, Mo, what profit margin did you put in?
I had 8, 12, and 16.
Wow, so low, Mo.
Yeah, I mean, I don't know how they surpass profit margin. I mean, I don't know. This is a hard one for me.
It is hard. I'm going to do 8, 12, and 16, even though I actually think he's being low.
Yeah. But I also wanted to put in there like worst case scenarios here.
Okay. So to me, okay. Man, that's a tough one. That's what makes the Crocs hard.
I think things do change with this Hey Dude acquisition. Those are much less of a
I see a lot of people with those Hey Dude.
yeah, and they don't stand out to you. Like when somebody wears Crocs, they stand out to you.
Yes, not in a good way.
Debatable, but yeah.
Okay. What about free cash flow margin, Mo?
I did 6, 8, and 10.
You beat the crap out of this company.
I did.
Now, PE, guys, the current PE and current price for free cash flow is very low. What we're putting in here is what's the PE going to be at the end of our years of analysis, at the end of year 10? Like, will people be paying 8 times, 10 times? Historical average is 15. What we want to do is go up and down from there based on growth rate, based on moat, based on ROIC, et cetera. So, Mo, what do you think?
I did 10, 12, and 14, but I think I'm going to go 12, 14, 16.
I think going higher is better.
Yeah.
Oh, I'm sorry. I was thinking about annualized return.
Oh, sorry.
I actually think on the low side, it should be lower than 12. I think it should be 8.
Oh, okay.
And 12 and 16. Because if you have a declining business, Mo, you need to get your money from buying back shares. So it's got to be a low multiple.
I guess the real question is this company going to be a declining business, or is this Hey Dude thing going to revigorate them and reinvigorate and then go up? Or continue the path forward? I don't know.
Listen, if they're doing a good job of taking their cash flow and using it to expand their product line to more stable things, that could be helpful for the company as long as they're paying a reasonable price for those acquisitions.
Yeah, I think the product that they bought was a smart product. They don't know about the price that they paid.
Yeah, I have no idea.
So,
all right, now finally, guys, our desired annual return. As you know, we can get 9 or 10% from investing in a long-term ETF. So you have to make assumptions here on what return do you want. Obviously, the lower your assumptions, the less return you need because you're like, hey, I already beat it up here. And as you get higher assumptions, you need a higher margin of safety. So you need a higher return. Mo, hit me straight.
12.5, 15, and 17.5.
So look at this, guys. Mo, I asked you the question. I agree with you. You beat the crap out of this thing. Why'd you put 12.5 still?
Because I still think that there's a lot of risks here.
I agree. I think if it ends up being a fad, I need to be paid for this fad.
Yeah.
I need to get a big return on this one. I could actually argue a higher return. But again, if you're like the guys in our community who loves Crocs and says, listen, I like the higher, I get that. But you've got to be able to pay for your return. So guys, I'm going to hit the analyze button. But before we do that, stick around for 1 or 2 minutes longer because we're going to explain the numbers here that pop out. It's really, really important to do that. And again, if you're part of our community, make sure you go into the general chat, tag Mo and I, and explain if you agree or don't agree with our assumptions, okay? So I'm hitting the analyze button. The stock is currently at $99. We have a low price of 23 to 32, high price of 90 to 150, and a middle price of 50 to 75. That means if you pay today's price and the low assumptions occur, you're going to lose about 8.5% per year over 10 years. And that makes sense because we think it's a declining business at the low end. If that middle assumptions occur, you make about 4.7% per year. And if the highest assumptions occur, you're going to make 16.5% based on free cash flow. Okay? So guys, to me, for me personally, and this is not for you, don't mimic me, it's too much of a fad. I don't want to take that risk. If I did anything in this, it would be a small investment just to see if it ran up. But do what you want to do. We appreciate your time in this video. And don't forget, check out our video to understand more about our community by clicking above. Thank you.